Hello, 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 hello. Yeah, hello. How you doing? So the whole of last week you were not live. So we want to promise that this week will be going live each and every single day. So looking at the daily time frame, all I can see is above price. My likely draw of liquidity is this CB, sell side imbalance, buy side inefficiency, this level here. And see price trade into that level. So I'm not looking for any lower prices right now until we happen to trade into that level. So we've just had that expansion giving us a fair value gap. So there's here. So can price trade back into this level again? I don't know. So probably that those guys were already long. But then if you are someone who normally waits for the pullback, if it happens that it gives you the pullback, well and good. If it happens that just decides to trade back into this draw, higher time frame draw on liquidity, still fine. So to me, this qualifies as the first presented fair value gap. So let me try that first one. So I'm also watching this 15 minutes favor. I mean, order block these two down close candles. So we had this BC, buy side imbalance, sell side inefficiency, trade into it, and we expanded, giving us our first presented fair value gap. So what next? Any pullback, we expect to see this first presented fair value gap, hold it, and also this order block on the 5 minutes. So it's taking too much time inside this level. So so if it happens to break lower, then it might as well just take us out. And so we are going to be waiting for 10 for the 10 a.m. candle. So the 10 a.m. candle is opening in the next 3 minutes. And indeed, if we are really bullish and we are really drawing towards that buy side liquidity, I mean that premium draw on liquidity, the daily fair value gap form of a CB, then we need to just open and push higher. So if we can afford to break this high, my stop is going to be scaled. So now we're having a fair value gap in here. And also it's going to give us another fair value gap as we are taking out this high. So remember, I'm not scaling to break even still, because I'm still waiting to see how this high here we are taking it out might just weak and then trade low again. Mm. So now we have this fair value gap, and then this other one. So most of the time, I just want to see price trade into this upper fair value gap. So the all of this qualifies to be a fair value gap. You also have to include this gap here. So trade into this high and not scaling my stop to break even still. But I expect to see price trade into this level, into this upper fair value gap, and then leave it. But as you can see, it has traded back into this level again. So that's not my vanilla kind of a move. So in this candle, this candle here should not close anywhere below the midpoint. I mean, anywhere below the midpoint of this candle. Mm. Now, if you can break above this high now, stop. I mean, going to scale it to break even. So still revisiting the first presented fair value gap. So we have to allow that. And also this was our 10 a.m. candle open. So just opened and trade lower. So could this be the small time frame manipulation into any level of inefficiency, and then we distribute higher? So now I'm watching this fair value gap here. So again, trading back into the first presented fair value gap. Okay. So So they should already tell you that it's kind of going to take us a while before we hit this target. But we don't want to see it close anywhere below the midpoint of this down close candle. So let's look at the six sister. Okay, kind of clean. It's not giving us those deeper pullbacks, but let's see. Drawn liquidity, I still love this high on S&P 500, or so that's the alternative for yes. So I still love this draw, that buy side liquidity resting above this level. So I still believe we are coming for that. Buy side liquidity. US 30, sharp. We're having also this high here. This one and this one relatively smooth. So we also have to take it out. I believe so. And also this one. So can it at least give us this high here? That's for US 30 or the Dow. Now coming to this, we also have this buy side liquidity on NQ, which we like to see price take out. So there's high here. So right where we have our TP right there. Yeah, so I like the way we didn't close below the midpoint of this right there. So but then it's spending too much time inside this range from this low to this high. It's really spending too much time. We need to leave it now. So now give us this fair value gap. Don't trade back into it. Once it gives us a fair value gap here, now break above, also give us another fair value gap, then just strip higher. So remember this fair value gap here. Now we don't want to see price trade into. That's why if we happen to trade above this level, going to break even the trade risk free now. So now we are risk free. So now price should not trade back into this gap. Now we need to start paying the trader, pay the trader. So such price actions are normally uh, difficult. More so if you're someone who is into scaling stop loss. So if you happen to scale your stop loss blindly, you'll find that these pullbacks they'll really be frustrating you. So in as much as I'm scaling, but then I'm really being careful. So right now, if it can trade below this level, so it better takes me out. But then I don't want to see it trade into this gap also. Yeah, it's a good start. So let's look at the 15 minutes, because the next 15 minutes candle, we need to watch how it's going to open and how it's going to be trading. So now let's take a look at this fair value gap in form of a CB, sell side imbalance, buy side inefficiency. So this one here, if we can break above it, so something like this. But then for now it's holding. So if we can break above this level, then our stop now is going to be scaled to the low here. But because this level is still holding, so might as well push it deeper into this breakaway gap. And then from there, so such price actions, they're normally not that friendly. So it's normally advisable the first day of the week, Monday, just sit on hands. Because let's say since we opened, so this basically the only thing we saw. There's expansion. So this was the market tipping as its hands on where it wants to go. Then gives us the first presented fair value gap. What happens? You trade back into the first presented fair value gap. So in here you have to look for your entries, which we did, and we expect it to expand higher. So this move here, we really wanted to see it push and hit our drawn liquidity level. Then what happened? We simply had this deeper draw into the lower fair value gap, which you wanted to see act as a a breakaway gap. So because we trade into this, so we really need to be anticipating for these deeper pullbacks, and you have to be careful when scaling your stop loss. So now because we broke above this level, so these pullbacks into this level, we need to see it hold, push price higher. So still I can see we've not taken out this high yet. So if this level is going to hold, so this act as a IAVG. But first, we've not taken out this high, so we have to wait. But we expect to see this act as a IAVG. So still, if it decides to trade into this breakaway gap, well and good. But then if you really survived inside this price action, then you're really somewhere. You are really ahead of your time. So the next 10 minutes, I want to see what price is doing. So in the next 10 minutes, will we have hit our how objective. That is, will we have drawn into that premium level, that buy side liquidity resting above these highs here. So this buy side liquidity resting above here, and that daily fair value gap, daily CB, sell side imbalance, buy side inefficiency. Oh boy, it's now on a leash. So now we've taken out that high. So I might as well just scale my stop loss now. So I'm really trying to see from the 5 minutes. Uh, okay. So just look at this price action. So if you've really survived it, then that's really nice. I feel like if they decide to push it lower, then they're going to push it deep again into this first presented fair value gap. If we open 1030 before we hit this level, then they might push it deeper into this first presented fair value gap. So as they will be doing that, I don't want to be caught off guard. So in as much as it's really risky, that is really risky because in here the only thing that might hold price just this IAVG. So now the next 5 minutes. I mean, So 5 minutes. We really don't need to see. We don't want to see it trade back into this one. Okay, according to me. So in as much as it's been staggering, so we just need to be doing this until we hit or just push higher into that level, tag that area of liquidity. So it's going down. So in the next 3 minutes, it's going down. So I don't know. If at all you are just targeting the full and you still have your stop down here, I mean, just have it. But for us, because we've scaled it, might take us out. I don't know. So if it's going to take us out, then and it happens to trade into this first presented fair value gap, it's going to take place real fast. But for now, we have to. I mean, the only way we'll be sure is once we are taken out. So until we are taken out, that's when we'll be sure. So because it does not hit our stop loss, so if it's going to trade lower, well and good. So might as well take us out, pull deeper into maybe this level or this first presented fair value gap. Mm, okay. So now 1 minute, and then if it's really trading higher into this level, then you need to get a deeper pullback maybe. I believe so. But it's really going to happen faster. So taken out, trade back into the breakaway gap. So my stop loss placement was quite aggressive, and I accept that. So because I was not, I mean, if we happen to trade back into this breakaway gap and this candle happen to close below, then it's really going to be dangerous for us. Yeah, so that's what I was saying. So just take a look at the 5 minutes and tell me what are you seeing. So yeah, everything we were anticipating now taking place. So you see that, yeah, so because it was really sluggish. So again, we have to drive low, and right now it's really going to take place real fast. Yeah. So if you fail to see it, then you're going to be left behind. So there's now not a breakaway gap. Yeah, so mm, so to me, I think that was it for me today. But still, I believe we need to push higher into that level. I don't know if that's going to happen, but that's what I was anticipating see happen today. So there's high here. I still believe we are going to come for it. But again, now remember that if it's going to be a continuation move, then this level needs to hold. The first presented fair value gap needs to be holding price. So we don't want to see it push lower below this first presented fair value gap, because if we happen to break lower below the first presented fair value gap, then any pullback into it, we need to see it hold price and push lower. Yeah, so to me, I don't want to participate any further. So I'm just going to watch it from my end, from my phone. And so I wish you guys the best. So if you're still looking to see, I mean, to catch something, then make sure you follow your rules, follow your plans, and everything will be fine. So for me now, because we are trading below the first presented fair value gap, so we've traded below it. So I don't want anything to do with it now. Yeah. So I was really expecting to see this fair value gap here, trade into it, and then maybe trade above it if at all we are going to continue higher. But then the fact that we've only traded lower, so this breakaway gap measuring, and then we are trading below it. So any pullback into this needs to hold price going lower. But I don't want to participate in that leg lower. I mean, if it wants to trade lower, I don't want to participate in that. But if at all it's trading lower, then uh, I'd really be watching for these lows here, this low here. That is if I was looking to push lower. But because that was not my cup of tea today, so I want to just leave it at that. So see you guys tomorrow, and peace.